In tonight's video, I want to take a realistic look at what is progressing in the metal sector, specifically the gold stocks. We're seeing a lot of really bullish sentiment. Traders are trying to pick the bottom, and I can tell you from years and years of experience that that is not how intermediate cycles bottom. Intermediate cycles bottom with sentiment like we saw back here in December, with everybody negative, everybody bearish, nobody seeing any possible way that the sector can rally, and we are not even vaguely close to that kind of sentiment yet. On a purely technical level, and you can see that after the election we broke below that 200-day moving average, and we've tried 3 times now to get above the 200-day moving average, and every one of them has failed. The 50-day moving average, it does not look like it's going to be able to push back above the 200, at least not yet. And you can also see we've got the intermediate cycle trend line here. That trend line was broken in May. We've back tested it a couple times, and now again we're starting to sink below a declining 200-day moving average. So I'm going to warn people again. It's too early to try and pick a bottom in this. This is not done. Not by a long shot. The dollar has just now started an intermediate rally. Even if it's going to be just a bear market rally, it still should last for 6 to 8 weeks. That probably means that the intermediate decline in gold is not going to bottom for another 6 to 8 weeks. So there's no rush to jump in and try and buy the sector right now. Everything is aligning bearishly. We're clearly moving down into a daily cycle low. We've clearly broken the intermediate trend line. The 200-day moving average is clearly rolling over. We've got multiple attempts to try and recover it. None of them are succeeding. We're making lower highs, and we've got a lower low here. I suspect we're going to have another lower low before this daily cycle bottoms. And I'll tell you right now what I told subscribers. The banks are going to run these stops below the December low before this intermediate cycle bottoms. So, there's just no need to try and pick a bottom here until price moves below this December low. And now in this chart, like I said, I'm about 99% sure that we're going to run these lows, and when we do, we're probably going to drop to this next support level right here at this peak at about $17 or so. So I don't think there is any need at all to anticipate or try to pick a bottom until first we break these December lows, and second, we're probably going to reach this support zone here at about 17 before we find our intermediate cycle bottom. And then finally, I'm going to just take a quick look at gold here. So you can see we've had this peak right here did marginally break above the April top. So we've had an almost 6-month rally. It stands to reason logically that after a 6-month rally, gold is going to need an extended correction, not something that just lasts 2 weeks, something that lasts 6 to 8 weeks, an intermediate degree correction. So the first confirmation I look for to determine whether or not something has started an intermediate degree correction is it has to break the intermediate trend line. And you can see gold is on the verge of doing that right now. $3 or $4 more, and we're going to break this intermediate trend line, and that will confirm that gold has started an intermediate decline. The next thing that has to happen is it has to complete at least one failed daily cycle. So gold has to at least drop below the May low. That was a daily cycle low. An intermediate cycle decline has to have at least one failed daily cycle. So we're going to have to drop below the May low, and an intermediate cycle low has to unfold as at least an ABC correction. That means there has to be, at some point, there has to be a bounce and then another leg down. I've shown this before. Even during the baby bull phase here, one of the mildest intermediate corrections in years, still completed both of those requirements. It dropped first leg down, bounced, second leg down. This leg down broke below the previous daily cycle low, completing a failed daily cycle. So even during the most powerful rally in a bull market, during the baby bull phase, gold still managed to complete both of those requirements. An ABC correction, failed daily cycle. We don't have either of those yet. We're going to, though. So the next thing to look for, as we finish up this week, we're probably going to get, I would guess, sometime this week, we're going to break this trend line, and that will indeed confirm that we are in an intermediate decline. And then the next step will be to break the May lows, and then we'll just have to see how deep it goes. My guess is that we're probably going to come down and test the 1160 to 1180 level before this intermediate cycle bottoms.